That's a look at a couple stocks I've got on my radar. Let's bring in Scott Bauer. He's joining us for a look at a few he's dialed in on. Scott's the CEO of Prosper Trading Academy. Always a pleasure to have you with us, Scott. I want to take a look at a couple of those names, but first and foremost, your thoughts on the PPI data today. The inflation number's a little bit hot.
Yeah, they were a little bit hot, pretty much to be expected after what we saw yesterday. Market's certainly taking it in stride, but again, showing cause for concern with the inflation that we've all kind of seen coming over the last few months.
How about jobless? That seemed to improve a little bit, steadying and getting better for the most part.
That was a good number, especially coming off that print that we saw last Friday. That was a good number. Again, just 1 week. We'll see what continues on here. And, I certainly think going back to that number we saw last week, I think we're going to see some revisions from that. I really do.
Noted. It did seem like, again, in terms of the PPI, the real concern here is that in the past we've managed to shrug it off saying, hey, this may not trickle down to the consumer. But as you mentioned, after yesterday's number, obviously it is. And then I did notice the jobless claims last week got revised a little bit higher. Let's dive into a couple of the stocks that you're dialed in on today. Boeing, they got a bit of a lift after approval from the Federal Aviation Administration. The FAA approved this electrical fix for the 737 MAX, it looks like.
Absolutely, and it's a huge relief to the carriers, especially the ones that are heavy on the 737, like Southwest Airlines, American Airlines. It's a real relief to them ahead of the big travel season coming up, especially with Memorial Day weekend coming up. And I don't know about you, I've been flying a little bit more recently, and every plane is packed now. So this could have really impacted some of these airlines here. In terms of the stock, though, Ben, when I look at where the stock is trading here, to me, it's in the middle of no man's land. It is sitting smack dab between the 50 and the 200-day moving averages. So in terms of a trade bullish, bearish here, I'm out of this until I see this thing make a move towards one of those areas. But it is smack dab in the middle of pretty big support and resistance.
Definitely a stock that's no stranger to sideways consolidation and finding comfort zones similar to what you're talking about right now. If we could just take a look at my daily time frame here, I want to point out we recently spiked up to 278.57. That was in the middle of March. That was after bottoming out around down at that $195 level, 193 we'll call it, in the end of January. But as Scott mentioned, kind of in the middle of the range that we've been in since, well, basically going all the way back to the middle of November. Now, I did also see that they're nearing a fix for the engine covers. That's one similar to one that broke apart on that United Airlines 777 jet over Colorado earlier this year, also somewhat bullish. And as you mentioned, Southwest and American Airlines getting a bit of a lift. Southwest up about 3% right now. American up about 2%. Let's talk about UPS and FedEx. Barclays actually likes both with an upside potentially of 15 to 20% in terms of some earnings upside there. What are you seeing in terms of price activity and reaction to the news, and your thoughts on the two names?
Yeah, I mean, they've been incredibly, incredibly strong. UPS pretty much trading at all-time highs. FedEx just off their all-time highs a little bit here. But even before the Barclays note that we saw this morning, there's been a lot of recent analyst earnings estimate revisions to the upside as well. Personally, I can't buy into a stock that's trading at its all-time highs, especially just heading right into earnings. So with UPS, I'm a little bit cautious here. However, if this stock were to drop back down here and get to that gap from the last earnings that we saw, which is, I think, right around 198-ish, maybe 200 or so, that, I think, from a technical standpoint, is definitely a good area to get in. FedEx, a little bit more palatable to me because it is off of those all-time highs that we saw. I think FedEx is one that I would take a look at in buying some upside call options heading into earnings. Now, earnings are not for about another 6 weeks or so. They're at the end of June here. So that's one that I would look for a little bit of a run-up going into those earnings. So I'd probably buy, some later dated call options going out to, maybe even July or August. It's
interesting you said that, Scott, because actually Barclays, I'm reading here now, it looks like they have FedEx as a top pick status in terms of a likely favorable pricing outcomes. They see. Talk Disney with us. What's coming our way? The quarterly results today on the close. Expectations for 31 cents a share. Revenue is expected to come in at $16.02 billion. I saw that weekly 177 straddle, price in a move plus or minus 5%. into the quarterly results, but it looks like I'm hearing, I guess I should say, about how investors are likely going to be watching how, well, Disney theme parks business and revenue, how that's coming along, because they've now got visitors at these parks.
I think management is going to be in a really, really tough spot on this earnings report. And the reason being is we know how well their streaming business has been doing. And that is what has carried this stock. They have transformed the stock, on that side of the business here to something pretty much incredible. But it's not going to be a surprise if that starts to taper off a little bit, just like what we saw with Netflix. If we start to get new users down a little bit, I don't think that's going to be a surprise. So, I think that we may see a little bit of disappointment, if you will, from what they say about the streaming side of the business. In terms of the parks and the reopenings, obviously that's a really positive. That's an optimistic thing. Quite frankly, though, I don't think that's going to impact the bottom line for quite some time. So that's why I think that management may be in a very tough spot on their conference call today. They're probably not going to give guidance, which the street, in my opinion, not going to like that. However, on any sell-off here, I'm a buyer. I think in the long run, Disney is a stock, is a company you got to have as a core holding. So I'm not buying into the print here, but on any sell-off, I absolutely want to scoop this thing out.
Scott, it sounds like in terms of concerns related to pent-up demand kind of tapering off in terms of Disney as everybody gets out and that initial rush back to the parks kind of tapers off. But you were mentioning in terms of names like Netflix, we have, well, demand falling as we are, as consumers a little bit less pent up, it sounds like.
Yeah, absolutely. And I think that's what we're going to see on the streaming side of what Disney is reporting, that, their acceleration in new users has been incredible. The growth has been incredible. And I think we're going to get a little bit of a slowdown, which is, listen, that's not necessarily a negative because the growth has been so big. However, I just, I think that the street may react negatively to that.
Yeah, I think that's a good point, too, in terms of the rate of growth that we have seen, unsustainable in many ways, but certainly impressive, and that's a consideration to take into account here when you're looking at some of the price activity in reaction to the earnings. Scott, a great breakdown. Always appreciate you appreciate you and having on the show. It's always a pleasure. Scott Bauer, the CEO of Prosper Trading Academy, helping us take a look at a few names he's got his eye on. We're going to shift